What's up, guys? It's Dan from Coin Bureau Trading, back at it again with another crypto market update. Today, we're going to take a look at why the crypto market is crashing and how low it could go. If this is the kind of content that you enjoy, then be sure to smash that like button and subscribe to the channel. Before we get started, guys, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So with that being said, guys, I want to start by addressing, I guess, the thing that a lot of people are saying why the reason the market is crashing is because the U.S. Debt was downgraded on Friday. I don't think that's entirely accurate. A macro analyst named Jim Bianco basically explained that this is a nothing burger because basically there's three ratings agencies. There's S&P, Fitch, and Moody's. And Moody's was basically the last one to downgrade it to the same level as S&P and Fitch, which they had done in 2011 and 2023 respectively. So basically this is essentially a nothing burger. Moody's was basically like late to the party, so to speak. Everyone was already basically treating U.S. debt according to that downgraded level because of the downgrades from those two other ratings agencies. So basically, if you see anyone saying it's because of this debt downgrade, that's not the reason. And actually, some of you will know that Bitcoin was actually rallying on the back of that, or at least some people were saying that Bitcoin is actually rallying because of the debt downgrade. Because of course, it's like, if debt is not looking so good, then of course that could potentially lead into inflows into crypto and specifically into Bitcoin. And that's kind of what we saw over the weekend. So this Moody's thing, which again happened on Friday, does not seem to be the reason why the crypto market is going down. What does seem to be the reason, though, guys, is something that happened late last night. It's actually crazy. If you look at Bitcoin on the hourly chart, you'll see it like spiked up to like 107,000, and then it just like saw a sudden pullback. And this seems to correspond to when Republicans in the House committee basically advanced Trump's big beautiful bill super late, I think at 10 p.m. In the U.S. On a Sunday night, which is crazy. Even here, it's saying like an unusual late night vote. And why is that important? Well, the reason why Moody's had done this downgrade is because they're concerned that U.S. debt is rising too much. And if you actually look at the details of this bill, it's basically cutting taxes and then also increasing spending, essentially. And of course, so that again, that's part of why Moody's did the downgrade, because they could kind of see that this bill was going to get tabled, and it's kind of in the first step of the process. It made it through the House committee, then it needs to be voted on by the House, and then it needs to be voted on by the Senate, and then it needs to be signed by the president. So there's still quite a few steps to go. But this first, I think, a late night vote was confirmation that, hey, like the Trump administration is going to continue spending. They're going to cut taxes. And if this sounds familiar, this is actually similar to what happened with Liz Truss, where she resigned, I think it was in 2022. Yeah, in October 2022, she resigned after tabling a similar plan. Of course, she blamed the central bank for kind of making the bond market weak. And it's kind of similar to what's going on now, right? Because Trump is blaming the Federal Reserve for making the bond market weak. And then now Trump tables this budget proposal. And of course, basically the reason why the markets are crashing is because the bond market is freaking out. So now we can finally start looking at some charts. Starting here, this is the yield on the 30-year bond. So this is kind of just like long-term interest rate, just for sake of simplicity. It's the yield on long-term U.S. government debt, which basically has an influence on long-term interest rates. As you guys can see here, you can see that these yields are basically about to explode to the upside. Like if it goes any higher than this in the next couple of days, then the 30-year yield is basically going to spike. And if you look at the 10-year yield and the 2-year yield and other like interest rates, basically they all look like they're going to spike as a result of potentially of the spending bill. Like literally, it looks like it's about to break to the upside. And when that happens, guys, you basically see everything being sold off. And why is that? Basically, guys, it's because U.S. bonds are the collateral for the global financial system. And this is something that a lot of people don't think about, and it's hard for them to wrap their heads around. But basically, U.S. debt is used as collateral to take on more debt. And I know that's like really messy, like it's like crazy to like think about. But basically, investors, they have lots of U.S. debt. They'll go to the bank and they'll say, hey, I have, let's say, I don't know, I have 100 million, or maybe we'll just keep it super simple. I have $100 of U.S. government debt, and I want to borrow $100 against it or $90 against it or whatever. And the bank will say, okay, sure. But then what happens is that when the yields go up, then the price of the bond goes down. So for example, let's say you put in $100 of like U.S. government debt, and you borrowed $100 from that, and then the price falls by, let's say, I don't know, 5% or 10% when yields are rising, and then the bank says, hey, we need you to basically start pay back some of that loan or increase more collateral or whatever, right? Like again, not to get too much in the details, but the point being is that when the value of the bond falls, then all of a sudden all these investors, which is most of the world basically, that were borrowing against these bonds, they have to sell anything and everything they can to get the dollars they need to basically pay down some of that loan, if that makes any sense. So that's basically what I think is happening now, is that you're starting to see a spike in yields. You're starting to see investors potentially even preemptively. Like they can all see, I'm sure all their models, like I can see this. I'm sure that they can all see it too. It's like, wow, like it looks like yields are about to spike. I need to go now and sell basically whatever I can and switch that into dollars, and then prepare basically to pay down some of my loans. And of course, this begs the question of like what exactly is going to happen here. Again, like no one knows for sure, but if yields go any higher than here, then we could continue to see basically downside in the crypto market and potentially also in stocks once the stock market's open. And you could basically see like a meltdown of sorts, basically in the market. And eventually, what the result of that eventually is that the Federal Reserve or the Treasury Department will have to step in and basically buy these bonds to bring the yields back down and make sure that all these people, don't have to liquidate all these assets to pay down the debt that they borrowed against these bonds. Again, I know it's super complicated, but long story short is that if this trend continues, crypto and stocks will melt down, but this probably won't last for very long because, again, the Fed or the Treasury will basically have to step in and stimulate. And of course, that's going to be rocket fuel for the markets, especially for crypto. But again, first we get the pain and then the gain potentially comes after. But again, in the short term, it actually looks like a pretty standard pullback. I'll show you guys that in a second. Before I do, though, I want to take a look here at the DXY, which is, of course, the US dollar index. And what I've been watching, as you can see here, guys, like I've been watching this trend line for, I think, about a year now. And I do think that the DXY is going to roll over. And to be honest, this would actually be consistent if we were to see stimulus, let's say, out of the Federal Reserve or the Treasury Department, basically to buy back these bonds. That would essentially result in like money printing, right? And that would cause the US dollar to fall. And I do think that the US dollar would fall here, probably in the next month or so, down to around 94. Why does that matter? Because the last time that the DXY fell down, basically had like this capitulation event, let's say like similar to here, this capitulation event basically translated to a huge rally in crypto and especially a rally in altcoins. And you can see even the same similar thing that happened back in the 2017 cycle. You can see that going into the top, the US dollar was crashing. US dollar crashes, altcoins rally. US dollar crashes, altcoins rally. What are we seeing now? US dollar crashing, and eventually altcoins will rally. But again, it doesn't mean it's going to be straight up. And like I just said, is it's possible we're going to see in the short term here potentially a pretty substantial pullback. The Federal Reserve or the Treasury will have to step in, buy the U.S. debt. That's going to devalue the U.S. dollar and basically cause it to fall, and it's going to cause crypto to rally. So it's about time we looked at a couple charts here, starting with Bitcoin. Again, in the short term, I actually don't think Bitcoin is going to go down too much lower. Maybe it'll just fall down back to around $100,000, which is both a key psychological level and also the Bollinger Band moving average here on the daily. I don't think BTC is going to be going much lower than that. If it did, then potentially it could fall as low as 93K. This is actually, I think, a level somewhere around, let's say, low 90Ks or high 80Ks would be kind of like a worst case scenario. Let's say, like, if there really is a meltdown. I will note that on the weekly, BTC is looking a little bit bearish so far. If it closes the week like anywhere basically lower than here, then this will be it's called a bearish engulfing candlestick pattern, and that would potentially foreshadow another week lower, let's say next week. But again, before getting too bearish or freaking out too much, in the short term here, so long as the daily Bollinger Band moving average for Bitcoin holds, which I think that it will, then the uptrend is still intact here, and I don't think we have to worry about any kind of meltdown scenario that I was just mentioning. I think it's just going to be, let's say, I don't know, like another, what it is, like 2 or 3% pullback in Bitcoin. But of course, in altcoins, they look like they're going to have a quite larger pullback here, and that's for the simple reason, guys, that basically they rallied quite a bit. So now it's about time that they had a little bit of a pullback. And again, this is completely normal after a big rally. Like literally Ethereum pumped 50%, and now it's down, I don't know, whatever it is, 10 or 20% or 10% maybe from the highs. That's completely normal. Like it literally rallied 50%. Like it's going to give some of those gains back, and then it's going to continue heading higher. And in this case for Ethereum, I do think it'll probably retest this Bollinger Band moving average on the daily, again, somewhere around 2,200. So maybe it has a little bit more to go here. Like in the next couple of days, ETH might fall a little bit lower, but then it's probably going to bounce from that level and continue heading higher. And for most altcoins, literally all you have to do, guys, is like, if you're on Binance or any exchange here, we're on the trading view setting. Even if you just go on the original setting here for Binance, and you just go here to the technical indicators, just slap on the Bollinger Bands, go to the daily time frame. You don't have to adjust any settings, and you can see if it's a major altcoin, then you'll probably see the exact same thing in the charts, whether it's Sui, Solana, whatever. They're all kind of approaching the Bollinger Band moving average on the daily. Some of them might go slightly below that, but so long as they hold roughly around that level, again, it doesn't have to be exactly on top or exactly on it. So long as it's within that range, that's completely normal. I don't think that ETH or Sol or Sui or these cryptos are going to fall much lower than that. Again, that's maybe another 5% lower lower from here, let's say like 5, maybe some altcoins it'll be more like 5 or 10%. But this is a pretty standard pullback again after such a massive rally. It's completely normal to have this pullback. Could that materialize again into this kind of meltdown scenario where you do see like Bitcoin meltdown, let's say down to like 93K, and then altcoins and ETH and everything go right back down, I don't know, to 1800? That's definitely possible. But we're gonna have to wait and see. I think that this week is probably going to be like, I'm still leaning pretty bullish, and I do think that we're gonna see some whether it's the Federal Reserve or the Treasury or someone is basically gonna step in, bring these yields back down to prevent basically a huge spike in yields. Because if it goes any higher here, the U.S. government is in trouble, and so are the markets, and someone's gonna have to step in and stimulate. So it's again, silver linings, I guess you could say. Short term, again, there could be a potential scare to the downside, basically, in crypto, super short term, like in the next couple of days. But by the end of the week, and I would say definitely by next week, if there is any market carnage or any issues as a result of rising yields, Federal Reserve or Treasury will have to step in. They'll have to stimulate, basically buy these bonds to bring the yields back down. That'll cause the U.S. dollar, or the DXY, to fall, which again, consistent with previous cycles, both in 2017 and in 2020, especially 2021. That fall in the DXY will translate to a huge rally in crypto, especially in altcoins. So don't panic. Don't think it's over. Don't listen to all those bears. Everyone's saying that it was a bear market rally. It's still way too soon to say that yet, but you can bet that they're all going to be saying that if we do see again like the surprise scenario of Bitcoin melting down to 93K and ETH like falling, let's say, down to 2K or even below that, everyone's going to say, I knew it was over. It was a bear market rally. I should have got out while I did. And then the bull market is over and all this stuff. And if that does happen, I'm definitely going to be buying that dip. Anyways, guys, before I close things up, I do need to shill the Coin Bureau deals page here. You might have noticed we were using Binance. We have a 20% trading fee discount and up to $600 in bonuses. That's the biggest discount that you can get on Binance. It's available exclusively through the Coin Bureau. Taking advantage of it is super simple. Just check out the link in the description or in the comments. It'll take you to a page that looks like this. Just enter your email or phone number. It takes like 2 minutes to sign up. Binance has all the cryptos you could possibly need. If you can't use Binance for whatever reason, we do have deals on other exchanges that are available to US and UK users, such as Arkham. And we also, of course, have deals on hardware wallets and other stuff that will help you out, in storing your crypto. But regardless of what you're doing, storing, trading, buying, selling, whatever, we have the tools for you to do that. And again, all of our partners here, they get a new user, you get a trading fee or fee discount, and we get a cut of those fees, and that's how the Coin Bureau makes its money. So, it's a win-win-win for everyone. So be sure to take advantage of those deals in the description and the comments while they last. And if you did make it this far, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.